The IMF has just issued a serious warning, and it shows how quickly the US is losing control over the global financial system. According to the fund, more and more countries are abandoning the US dollar and switching to the Chinese yuan, and the numbers behind this shift are enormous. In the first 9 months of this year alone, China expanded its lending capacity by more than $2 trillion, a financial force that is literally pulling countries into Beijing's orbit, and Washington understands this perfectly. The logic is simple. The world economy no longer trusts the US the way it once did. Years of trade wars, tariff conflicts, and political unpredictability have undermined confidence in the dollar, while China is offering cheaper loans, softer terms, and a rapidly growing financial system that operates outside US control. Countries need stability, and Beijing is offering it. That is why the IMF is sounding the alarm. We are looking at numbers that should be alarming because they show how quickly the dollar is losing ground. According to the People's Bank of China, the volume of new yuan loans reached 15 trillion yuan in the first 10 months of 2025, about $2 trillion. When one country injects more than $2 trillion into the global credit market, this is not normal. This is a deliberate strategy, and it did not appear out of nowhere. China's economy is under pressure due to problems in the real estate sector, weak exports, and falling global demand. And Beijing's response is aggressive credit expansion. And not only inside the country, China is using its financial power to push the yuan abroad, strengthening its global influence while stimulating its own domestic economy. Every new loan, currency swap, or offshore issuance solves two tasks at once. It supports China and weakens the dollar. A major role is played by the swap lines developed by the People's Bank of China, allowing foreign central banks to borrow yuan directly, bypassing the dollar entirely. What looks like financial cooperation is in reality an instrument of geopolitical influence. Countries connected to yuan liquidity become dependent on China and less dependent on Washington, and we are already seeing the consequences. At the China CELAC Forum in May 2025, Xi Jinping announced a credit line of 66 billion yuan for Latin America. China has also fully supported more than 100 joint projects in infrastructure, energy, and digital technologies, all denominated in yuan. These deals do not just develop regions, they anchor their economies into the yuan-based system. Infrastructure gives China even more long-term leverage. According to a CSIS report, Chinese companies already manage or invest in 31 ports in Latin America and the Caribbean, many located on strategically important routes. Control of ports means control of supply chains, and therefore political influence. China's offshore financial markets are also growing. Dim sum bonds, yuan-denominated securities issued outside mainland China, are rapidly gaining popularity, allowing foreign companies and governments to raise capital directly in yuan. Such a financial system simply did not exist 20 years ago. Meanwhile, the US ability to lend is shrinking due to high interest rates. Developing countries can no longer afford dollar borrowing when treasury yields remain elevated. Against this backdrop, cheaper yuan loans are becoming increasingly attractive. Even major regional economies are switching to the yuan. Argentina has expanded its swap line with China to 5 billion yuan, gaining the ability to borrow and conduct settlements directly in yuan instead of dollars. Such moves are pulling countries out of Washington's orbit and tying them ever more deeply to Beijing. For the US, this is a dangerous shift. Latin America has for decades been considered its economic and political backyard, but the more countries borrow in yuan, build infrastructure with Chinese money, and integrate into Chinese projects, the farther they move from the dollar system and the closer they get to China. And it is this shift that is forcing Washington and the Trump administration in particular to urgently search for a response. If you look at what is happening in Argentina, it may seem that the US is trying to counter China, but the facts say the opposite. The US Treasury under Scott Bessent concluded a $20 billion currency swap with Argentina under President Javier Milei. On paper, it looks like Washington's attempt to regain influence in a region Beijing is steadily pulling toward itself. But in reality, the US is stepping into a space where China already dominates in both finance and trade. Argentina remains deeply connected to Beijing. Despite the sudden financial support from the US, trade with China is accelerating rather than slowing. After Argentina reduced export duties, China purchased about 7 million tons of Argentine soybeans, a huge boost for Buenos Aires, but a direct blow to American farmers who are simply shut out of this market. To them, it looks as if Washington is pumping billions into a country that is strengthening its relationship with China. The financial picture is no less contradictory. Although the US insists this is a swap line rather than a bailout, the effect is almost the same. American banks are discussing an additional $20 billion in loans, which could push total support close to $40 billion. And all of this is happening while Argentina continues to expand its yuan swap lines, sign deals in the Chinese currency, and move ever deeper into Beijing's economic sphere. And here, the irony becomes impossible to ignore. While American farmers lose access to China's agricultural market, the US is simultaneously helping Argentina gain even greater access to that same market. Washington is spending billions to keep Argentina in its orbit, but Argentina is using this pause to integrate even more actively into China's financial system. The contrast ends up being stark. The US spends billions to keep a strategic partner close, while that partner continues drifting toward China. China is no longer just competing in trade or investment. It is restructuring the financial infrastructure that global markets rely on, and doing so in a way that bypasses the dollar. Over the past 5 years, external yuan loans, deposits, and bond issuances by Chinese banks have quadrupled, exceeding 3.4 trillion yuan, roughly $480 billion. This is not just credit growth. It is the creation of a new financial system functioning outside dollar dependence. One of the key instruments of this shift is CIPS, China's cross-border interbank payment system. It is smaller than SWIFT, but growing very quickly, already processing trillions in annual transactions and allowing countries to settle directly in yuan. For states under sanctions, suffering from dollar shortages, or facing high borrowing costs in the US, such an alternative becomes a powerful resource. This new infrastructure is already reshaping global trade. Increasing volumes of oil, gas, metals, and agricultural goods are being settled in yuan, especially after China and Russia expanded their energy trade in the Chinese currency. Brazil and China have also formalized yuan settlements for major commodities from soybeans to iron ore, allowing billions in trade flows to bypass the dollar entirely. The statistics are unequivocal here. The role of the yuan in global trade finance has surged. It recently surpassed the euro, becoming the second most used currency in trade settlements. Its share in the IMF SDR basket is also gradually increasing, reflecting growing international confidence in the yuan as a reserve asset. While the IMF publicly discourages countries from shifting to the yuan too quickly in order to protect the dollar's dominance, central banks are behaving differently. They are expanding reserves, buying gold, and joining new financial systems that reduce dependence on the US. The system the IMF is trying to preserve is slipping away despite its attempts to warn the world. And here is the main question. If the world is already preparing for the post-dollar era, is Washington itself ready, or has the moment already been missed? So if you want to follow how these changes are reshaping global power and find out what China is planning next, then subscribe. See you in the next episode.